Good morning, children. I hope all are doing good. The chapter we are in is Theory Base of Accounting. In our previous class, we have covered the following concepts, that is, conventions, system of accounting, basis of accounting. In conventions, we came across 4 types of conventions. Conventions of full disclosure, convention of consistency, convention of conservatism, convention of materiality. Convention of full disclosure means the material fact must be disclosed in the financial statements with sufficient details. Convention of consistency means the principles, practices, and the rules of accountancy should remain unchanged from one accounting year to another. Convention of conservatism. Certain sum of money or provision must be made for all the possible losses, but the prospective profits must always be ignored. We should always look for uncertain risks and avoid predicting the profit which we have not yet received. And the last convention was convention of materiality. A detailed record is made only of those transactions which are important or significant to the internal and external users of accounting information. In other words, those transactions which have a materialistic evidence is what we will be considering in the accounting statements. The immaterialistic transactions will be completely ignored. The next topic that we covered was system of accounting. There are 2 systems of accounting. You have the single entry system and double entry system. Single entry system, it is the incomplete records of books of accounts where only one fold of aspect of a transaction is considered. On the other hand, we had double entry system. Both the aspects of every transaction is maintained and therefore it is a complete records of books of accounts. And the last topic that we did was the basis of accounting. There were 2 bases of accounting. We had the cash basis and the accrual basis. Cash basis of accounting, it refers to that type of accounting where only cash transactions are recorded. When I say cash transactions, when the cash is met immediately, only those types of transactions are recorded in the books of accounts. Accrual basis, both cash and credit transactions are recorded. You'll need to know the meaning of credit transactions. If the customer promises to pay on a future date, that's when we call it as credit transaction. So in accrual basis, both cash as well as credit is considered. On the other hand, for cash basis, only cash transactions are considered. In today's class, we are going to go to the next topic, which is accounting standards. What is accounting standards? Accounting standards are written statements issued from time to time by institutions of accounting professionals specifying uniform rules and practices for drawing the financial statements. Now what happens, children? We might be following a set of rules and guidelines. If there is any changes in the rules that the business is following, the accounting standard helps us to know the changes in the rules and guidelines. It's basically a written statement that is issued from time to time by the institutes of accounting professions. That is, the professional bodies will be issuing these documents specifying the uniform rules and practices. What are the rules that we have to follow? What are the guidelines that we have to follow? If there is any changes or the rule in the rules or the practices, that also will be written by these accounting professionals. Why? So that we can have a uniformity in the preparation and the presentation of financial statements. So I repeat, children, what is accounting standard? It is a written document which is being issued from time to time, basically providing all the rules, guidelines, concepts, principles, conventions, etc. Everything will be in a written document issued on timely basis, so that we can have a uniformity in the preparation and presentation of financial statements. This is being usually done by the accounting professionals. The next one is the nature of accounting standards. What could be the nature of accounting standards? The first one is, the accounting standards are the guidelines which provide the framework credible financial statement can be produced. So what happens? A complete proper financial statements can be provided or produced. According to the change in business environment, accounting standards are being changed and revised from time to time. That is what I told you all, children. Whatever rules and guidelines that we were following, if there is any sudden change in the rules or the guidelines, accounting standards helps us to make the required changes. The next one is to bring uniformity in accounting practices and also ensure consistency and comparability is the main objective of accounting standards. So what happens? I told you all, there are wide range of users who are depending on accounting information. So it is very important for us to provide the accounting information in a very consistent and uniformity manner. That is, it should be in such a way that it is easy for them to compare it with the previous year's financial statement of with the other firm's financial statement. So in short, in order to have a uniform and unchanged preparation and presentation of financial statements, accounting standards helps us to acquire that. The last second one is, the alternative accounting practices is available and enterprise is free to adopt. So accounting standards are always flexible. If you want to make any changes, if you want to adapt any changes, the accounting standards are very flexible. That is, you can adapt whichever you feel it will be suiting for your entity. The last one is, accounting standards are a mandatory in nature. It is must for every business to apply and abide the accounting standards. Whatever rules and guidelines that they are following, it should be according to the accounting standards. So these are the nature of accounting standards. Let us go to the next topic, which is objectives of accounting standards. What is the overall objective of accounting standard? Please remember the meaning, children. What is accounting standard? It is a written document which is issued on timely basis by the accounting professionals. For what purpose, children? So that we can have the uniformity in preparing and presenting the financial statements. So having the meaning, what could be the overall objective? First one is uniformity. I have explained with a broader sentence. If you could see, accounting standards are required to bring uniformity in accounting practices and policies by proposing standard treatment in the preparation of financial statements. It's the same repetitive, children. Because we want to have the uniformity, we want to apply the accounting standard. The next one is improve reliability. We all know what is reliability. The accounting information has to be reliable for n number of users. You know, there are so many users who are dependent on the accounting information, so it should be reliable for the users. To improve reliability of the financial statements, statements prepared by using accounting standards are reliable for various users, because these standards create a sense of confidence among the users. Because this is being done by the professional accounting bodies, it is very essential that the accounting information what is being given, it should help the users to fetch the required information. The third one, to prevent frauds and manipulation by changing the accounting methods and practices. What do I mean by codifying, children? It is changing the accounting methods or practices, so it helps us to avoid the unnecessary errors of frauds. And the last one is accounting standards provide uniformity in accounting practice, so it also helps the auditors to audit the books of accounts. One of the external users of accounting information are auditors, and when we apply the accounting standards, we are into consistency. That is, whatever method we were following, the same thing is remained. So it will help the auditors to look into the books of accounts and give us accurate decisions. So these are the objectives of accounting standard. The next one is IFRS. What is IFRS? International Financial Reporting Standards. Now we just saw accounting standard. We just got the basic meaning of accounting standard, the nature of accounting standard, and the objectives of accounting standard. The next one what we're going to go is for the International Financial Reporting Standard. What is International Financial Reporting Standard? The term refers to financial standards issued by International Accounting Standards Board, that is IASB. It is a process of improving the financial reporting internationally to help the participants in the various capital markets of the world and other users. So what happens? Accounting standards serves for the domestic area, that is within the country, whereas international, it helps us to improve the preparation of financial statements worldwide. If you could see, children, it is it is a term that refers to the financial standards that is being issued by the International Accounting Standards Board. For what purpose? So that they can improve the financial reporting internationally, not just within the country but internationally, to help the participants in various capital markets of the world and other users. So they are not just framing the accounting standards within the country, but they also have another professional body, which is the IASB, who is providing international financial reporting standards, so that the users can be actively on the international level as well. The objectives of IFRS are to develop the single set of high quality global accounting standards, so that the users of information can make good decisions and the information can be comparable globally. Now here, children, we are no more concerned about within one country or within one particular state. We are not talking just for the domestic level. Here we are talking presenting the financial statements for the worldwide, that is globally, internationally. So first thing is, you're going to prepare a single set of high quality global accounting standards, so the users of information can make good decisions. That is the first thing. The second thing is to promote the use of these high quality standards. While you're using this way of preparing the financial statements, you're basically promoting the IFRS. Third one, to fulfill the special needs of small and medium sized entity by following the above objectives. So basically you are also involving the small and medium sized enterprise to follow this IASB, that is, which is being given by the International Accounting Standard Board. You are also influencing these small and medium enterprises to also present their financial statements according to the IFRS. What are the benefits of using IFRS? What are we going to gain if we start following the IFRS? What are the benefits that we are going to gain? The first one is global comparison of financial statements of any companies is possible. You are not just going to compare the financial statements within the firm or within the country, but also comparing it globally. That is one of the advantage. The second one is financial statements prepared by using IFRS shall be better understood with financial statements prepared by the country specific accounting standards, so the investors can make better decisions about their investments. Rather than following the accounting standards related to one country, if you follow IFRS, which is globally accepted, it will be very useful for the investors to take accurate decisions. Third one, industry can raise or invest their fund by better understanding the financial statements which are there in the IFRS. I told you all children, IFRS is completely to do with the international level, and this is also globally accepted. Each country will have their own accounting standards, but when it comes to IFRS, it is one set of standards that they will be following. So what happens, you are actually enabling the industries to also raise or invest money. The way you're presenting your financial statements, you're enabling these industries to invest money into your venture. Accountants and auditors can render their services in countries adopting IFRS. So not just providing services within the country, the auditors and the accountant can also provide their services internationally. By implementing the IFRS, accountants and auditors can save the time and money. So what happens, instead of just following the accounting standards of one particular country, if they start implementing the IFRS, which is accepted globally, it's saving their time as well as their money. The last one is firm using IFRS can have better planning and execution. It will help the management to execute their plans globally. Why do we say it has better planning and execution, children? Because these are the standards that is fixed at the international level. When it comes to accounting standard, it could vary from one country to another country. But for IFRS, it is highly impossible because it is one standard which has been implemented for all the countries. So what happens, it will help you to have a better planning, execute proper financial statements, provide proper accounting information to the users of such information. With this, we have completed with the benefits of IFRS. The last topic in this particular chapter is GST. All of you all would have been familiar with this concept of GST. What is it? Goods and Service Tax. The Goods and Service Tax, which is otherwise known as GST, is a value added tax levied on most goods and services sold for domestic consumption. It's basically an added tax, children. Apart from the price what you're paying for the product or service, it's an additional tax amount that you're going to pay on the product or the service. The GST is paid by the customers, but it is remitted by the government by the business selling the goods and services. So what happens? The customers will be paying it. Though the customers are paying, who is actually remitting it? It is the government who is taking it from by the business selling the goods and the services. It is not going to the business children, it is going to the government. We have two types of government, central government and the state government. This GST, whatever we are paying in addition to the price, it is actually given to the government and not to the business. In effect, GST provides revenue for the government. So what happens? This tax what we are paying, which is not going to the business but it is going to the government, it acts as a revenue to the government. What are the key takeaways of GST, children? The goods and service tax is a tax on goods and services sold domestically for consumption. Okay, it is a tax which is mainly sold on the goods or services which is of domestic use. The next one is the tax is included in the final price and it is paid by the consumers at the point of sale and passed to the government by the sellers. So what happens? It is it is a tax that we are going to pay in addition to the price, and this tax is directly given to the government by the sellers, and it is being taken only by the government and not by the sellers. The GST is a common tax used by most countries globally. So what happens? This is one such tax which is being implemented globally. It's not just for one country, one state, but it is for the entire global market. And the last one is the GST is usually taxed as a single rate across a nation. Whatever percentage we are going to fix, the same percent is implied all over the nations. There is no any changes in the rate or the price that you are going to add as a tax. The last one is the features and the advantage of GST. What are the features of GST? Common law and procedure throughout the country under single administration. It's basically under the legal requirements. It's fulfilling all the legal requirements. It's basically common under the law, as well as the procedure is going to be same throughout the country under the single administration. Destination based tax and levied at the time of consumption of goods and services. What do we mean by destination based tax, children? It is a tax that is being done at the point of sale. Destination is here point of sale, and what happens? And it is levied at the time of consumption. That is what is very, very important. Double taxation is avoided. You don't have to pay double taxes. Initially, before GST used to come, we used to pay two taxes. One for the one was VAT, and the other one was another tax that we had to pay separately for the government. So to avoid all this double taxation, we just abolished the double taxation and we followed the concept of GST. And the last one is there is no scope for levy of cess, resale tax, additional tax, etc. This is the additional thing, children. Apart from your tax, there is no any other percentage given separately towards educational cess, additional tax, etc. This is to do with the features of GST. Going to the advantages of GST. What could be the advantages of GST? The first one is abolition of multiple types of tax in goods and services. You don't have to be paying n number of taxes. It is just one GST tax that you will be applying on the products and the services. You don't have to pay one tax for the government, one tax amount for the seller. All this has been avoided from the time GST came into picture. Increases the revenue to central as well as state government. I told you all this particular tax is directly taken by the government. It is not given to the seller. So therefore it is one kind of profit that the government is earning. Then you have removed the cascading effect of taxation. What do we mean by cascading? The double taxation is completely removed under GST. And the last one is neutral to all business processes, business models, organizational structures and geographical locations. There is no any variations. It is worldwide tax. Whatever percentage we are following, the same thing will be applied elsewhere. There is no any variation in the percentage of tax. With this, we have completed the features and the advantages of GST. We have come to the end of the chapter, children. We have completed concepts, conventions, accounting standards, the systems of accounting, the basis of accounting, IFRS and GST. With this, we have completed chapter 2. Thank you, children. Any doubts, we will get it clarified in the subject group. God bless you all.